Hello traders and welcome to another video review. Today is Monday, February 14th, 2022. Let's start with the Forex calendar review. As you can see, we don't have too much events scheduled for release for Monday, and the London session, the New York session is pretty poor with data release. However, we got the producer PPI prices from Switzerland. As you can see, they increased to 0.6%, beats the expectations of 0.2% as well. We got Bundesbank monthly report from Germany scheduled for release at noon. Then 5 p.m. FOMC member James Bullard speech, and then of course the visitor arrivals to New Zealand quarter to 11 p.m. So that's the old data we can concentrate on, but well, those data will not be a kind of a big market mover. So let's see what's happened over the weekend on the financial markets, and I think we should start today with the crude oil. The crude oil daily timeframe chart is showing us the scenario of the 5-wave impulsive progression to the upside continued, right? The target is around the level of 98.87, 98.81. So this is kind of a wide area, but the best Fibonacci cluster I could find, and it's based of course on the progression of this 5 waves to the upside, of the internal relations of the Fibonacci ratios of this 5-wave advance to the upside. Right now the level of $94.93 per barrel of oil is the most expensive, the higher price in years for the crude oil. As you can see, the last time we got around the level of 93, I'm still scrolling back, is that year here, and this is 2014. So very interesting situation. I guess there's even the zone from 2014, in the middle of the 2014, 108 and 112. This is the supply zone. This zone might be hit easily very soon. I'm not talking about today, but relatively even to the end of the month or with the beginning of March 2022. Why? Because we are seeing enormous market resumption and uptrend continuation to the upside after, of course, the brief negative rates during the pandemic in the beginning of the April 2020. This is critical bounce here. That's another bounce. This is wave 1, wave 2, wave 3. That might be the wave 3 top correction, and now we are of course expanding wave 5. If we pass the level of 100, so the 98.87 is the target, but if we pass 100, then of course the next target is 108, 112. So please keep an eye in this mind that despite the fact that the market conditions are extremely overbought on a daily time frame chart, it can stay like that for some extended period of time before the market start a correction. Okay, so crude oil still in the uptrend. What is gold doing then? The spot gold market, as you can see, is breaking to the upside above this pattern I have put for you here on the chart. Very bullish signal. This black line is the short-term trend line made from the middle of the November last year. We just recently broke above this level, above the trend line and above the level of $1,854 per ounce of gold. Next target, of course, is the high located at 1,876, and if the momentum will stay above the level of 50 and above the level of 60 to keep that strong momentum, then of course we should easily hit 1900, 1916 supply zone. Of course, this is the high of the middle of 2021, 1916. So this pattern here might be just the beginning of a big spike of on gold that is coming soon. The last high on gold was made at the end of the 2020 in the this is the beginning of August 2020, around the level of $2,075 as you can see. Then we have of course this decline, and that might be just the beginning of a bigger up move. If we break above the 1877, this level here is the lower high. When we break above this level, we have the sequence of low, lower low, higher low, higher low, higher low, higher low, and that would be first higher high. That means that trend is changing. This is the downtrend correction, as you can say. Then we have the first bounce, and then this period of the accumulation and uncertainty. After that period, we shall go up above the 1877, even above the 1916. Breaking the 1916 will be the moment when most people will realize, most traders, investors will realize that trend is changing to the uptrend, or as we can say, the trend is being continued, right? Because this is the clear 2020 pandemic trend to the upside. That's the period of the relief, and that leg to the upside, another leg to the upside, is missing on gold. So if we break above the certain levels, the key levels, the uptrend on gold might be continued. Let's take a look at the S&P 500. This American index on the daily time frame chart is very technical right now. What's happened? 61% of the Fibonacci retracement has capped the rally, the bounce, basically from 4,300, 4,234. That's big pin bar. The bulls tried 2 times to break above 4,594. They failed. Okay, we have the Harami, and we have the bearish engulfing pattern. This is very negative for the S&P 500, because it means we will likely go lower on the S&P 500, below the recent low from the end of the January, below 4,234. So please keep an eye on the current market reaction on this level if we get there. But what we know for sure is that there is no rally without breakout above 61% of the Fibonacci retracement. This is the last resort for bears. If bulls will break above it, then we can easily get towards the swing high and all-time high at 4,870. So situation is very, very interesting. As you can see here, the bulls have no chance to break and sustain the breakout above the level of 50. So once again, this is like a Batman pattern here, Batman ears pattern here, and then we are going lower on S&P 500. So what is then the US dollar doing? Let's take a look at the US dollar index. The daily time frame chart of the US dollar index after the period of the sell-off is showing us the test of the RSI short-term trend line and the bounce back above the level of 50 points on the RSI, which means this is a very nice rebound, which is supported by the increasing bullish momentum. The next target for the US dollar is seen as 96.61, 96.92, which are the intraday technical resistance levels, of course. So let's put them in red so we won't get confused. Those two levels are located here. Those levels I'm talking about. The next one is 97.45, 3, which is the high of the rally, the end of the January rally. And then of course there's a target 97.77 and 61% projection at 97.70. It looks good, maybe not that much impulsive, but still it looks good for this market to continue the rally higher. Please notice the fact that we are still trending inside of this channel, right? So we got our old Elliott wave progression. Now we don't need it anymore, so let's not get confused. We got this correction 2.4%, and then of course nice rebound, so the correction is no longer needed as well. It looks like a stock market is going down, dollar is going up, gold is going up, US oil or the crude oil is going up. What is Bitcoin doing? Which of this market Bitcoin would follow? As we can see here on the daily time frame chart of the Bitcoin, it looks like the Bitcoin likes to follow the stock market, the SP500 or the Nasdaq indices, because this Nasdaq index is apparently a tech index, and the Bitcoin is being considered as a tech activity, of course, because of the blockchain technology. So we got clear rejection here, we got the inside bar here, and the clear confirmation of the rejection here. So again, 61% of the Fibonacci retracement on Bitcoin, 44,651 is the level that makes the bulls really poor market runners, because they tried to rally but they failed. Despite the fact that the local high was made at 45,811, the breakout wasn't sustained like this one. This is the good breakout out of the channel above the technical resistance, 39,440. Nice breakout. This is what we are looking for here on this zone, because this is the key supply zone on the Bitcoin. No breakout above the supply zone, no rally, no up move continuation towards 51,000. So if they failed here, if the S&P 500 will go even lower, then of course we might assume that the Bitcoin will possibly drops even towards $32,905 again. But so far bulls are still in control of the market. The RSI is still positive, and the bulls are fighting for another breakout, for the possibility to, for the third time, to test this zone and to break. If they failed for the third time, you know how it goes, how they say, right? Third time lucky. Well, maybe that will be the case, maybe not. I don't know that for sure, but what I'm saying is that increased bearish activity around this level is making the bulls to go lower, to pull back. They're still trying, but if the pressure will be too strong for them, they will give up, throw the towel, and then we might have a sell-off. If that will be coordinated sell-off with US dollar index going up, S&P 500, Nasdaq, Dow Jones going down, Bitcoin will join the stock market and will just simply keep going lower towards 32,904, maybe even lower. It depends on the other markets. So that's my point of view for the major markets for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.